sure. Okay. Please make sure your mics are turned off, okay? All right, so I guess I'm here back on MT5. I just needed to show us something. I hope everybody can see my screen okay. Okay. Traders, can you see my screen? Let me be sure before I start speaking. And can you hear me clearly?
Yes.
Yes, I can.
Okay. So now let me use here as a typical example of what I was talking about. Now we can see here, this is a week here. Now, imagine that you were looking forward to selling, and then you spotted out. Okay, let me use this one. Okay, like this. So, all right. Now, you want to one more this. I just dislike MT5 nowadays. You take note of what I just did here. The beginning of your rectangle starts. Your rectangle starts from where the market closed, okay, to the ending of the week. Okay, so this is for you to know that you don't ignore the week when spotting out your supports and resistance. Do not ignore the week, especially when you are spotting those zones in from a higher time frame. Okay, you don't ignore the week because the week means a lot to your account from the smaller time frame. I guess this is the exact place where when I was on the trading view. So now exactly what I want to show you guys before the interruption took place in the trading view. I will now spot it out here. So now let me shift this here. Just shift this and then I'll bring out something here. Okay, now let's go to a higher time frame and see what this place is worth to your account if you mistakenly took a sell, because this is resistance, huh? So if you took a sell from here because you believe your trend line is enough to bring your support and resistance, now this is what would have happened to your account from a lower time frame. I'll just go to the 5-minute time frame and find it. Where do we find it? Okay, this is the area. How does the area? Okay. So now this is that area that I marked out from the higher time frame. So let me zoom it out a bit more. Now imagine that you took yourself from here. This is exactly that zone. Okay. Now, if you took yourself from here and one spike, and the market spiked up once, remember this is a 5-minute time frame, because if it's a 1-minute time frame, it's going to be longer than this. Still going to, I still need to bring it up because most traders trade from the 1-minute time frame. So I just need to open your eyes so that you can see that it's not just about spotting out support and resistance with the trend line. You also need to be careful 1-minute time frame. Okay, take it down and then find it. Please turn off your mics. Turn off your mics, traders.
Sorry, let me this one.
Please turn off your mics. Turn off your mics. Okay, next, please. I need to find it. So far away. Okay, now what would you? I will use somewhere closer than this. We don't get to pick it up. I'll use somewhere closer. Let's use this area. This is not the zone I was looking for. Let me use this area now. This way. Okay. So let's say we took support here. We took here as resistance. Now, 1-minute time frame. What's happened? As far as this. Okay. Please turn off your mics, traders. Turn off your mics. Please turn off your mics, traders. Turn off your mics. This is not what I'm looking for. Okay, so please turn off your mic. Who is this? Turn off your mic. If I find who it is, I will take you off the meeting at once. So traders, let me just give us everything at once. So what I just wanted to let you know is that when spotting out to support a resistance, don't just rely on this trend line alone. You can also use this square to spot out support and resistance, and always make sure that you cover the week for our time frame. Always make sure that you cover the week. Okay, so with the
I think you need to mute that person.
I'll find the person right now.
It's Raymond.
So you want to make sure that you cover the week of every candlestick that ends up in any zone where you want to take as a potential zone. Okay, make sure you cover that week, because that week, especially if you are spotting that zone out from a higher time frame, that week is gonna worth a lot to your faint account in a lower time frame. So you want to make sure that you spot out both the week, cover it all up, all right, and then take that zone as take that area as a zone where you want to look out for. Now, if we want to take here now as supports and resistance, okay, you see the support here, the support here, support here. Now, I don't advise you to just take it this way. What you want to do is to bring this square, place it here, and then take it up to the area where the market closed, and then drag, okay, drag. So in this case, you find out that it has covered quite a lot of zone. Okay, so if there's anything that's ever gonna happen, you want to spot it out from this zone to prevent these are what we call false breakouts in the markets. These are what we call false breakout. You see it here, and then you think, oh yes, it's time to sell, and then what you see is the bulls take power again. So you want to make sure you don't fall prey to false breakouts. Okay, so anytime a false breakout occur, especially in a lower time frame, if you check in a higher time frame, you will always see this long wick, or this long wick. Those are the false breakouts, and those false breakouts are what uh, the movers and shakers of the forex market use to eat a lot of money from the retail traders. False breakout, because they know that everybody is looking at the zone. Yes, it's a support zone. I'm looking forward to doing this or doing that. So they give you a false breakout that makes you feel that, oh yes, it's time to sell or to buy. You understand? So you want to make sure you don't fall prey to false breakout. And how do you stay safe from falling for false breakout? You want to go to your higher time frame and use the rectangle shape to spot out areas of support and resistance. Make sure you cover the week fully. Like now, let's say for instance, this is a week here. You want to make sure you cover that week completely, cover this week, so that when market ends up going bullish and then comes back to the zone, you want to figure out what will happen inside here. Okay, what will happen inside here? So now you get to see that the market came down, got rejected by buyers, and pushed up again, and then finally broke out. And what happened inside here? There was rejection again. Okay, buyers pushed up, came out of that zone, and sellers push back in. And this is the same zone where you will see people plot this trend line and tell you here is a support zone. A lot of people are going to plot this place out as support zone, because a lot of things are happening here, as you can see. Okay, a lot of people are going to plot this place out as support zone, and people will be looking out at this area. But you get to find out that when you have the rectangle shape, this rectangle, it gives you the whole picture, because you have covered the last lows that occurred in the past, and you have made sure you cover the entire week. So you want to make sure you don't take entries from here until you see what's happening. Okay, until you see what's happening. Now you get to see that the markets did all it had to do here, and then came out of this zone now and took rejection here. Now here it now became a resistance zone. Here now became what? A resistance zone. But if you look now, this place that is now a resistance zone, now let me show you something. You got to find out that this, I need to delete this right now. Now you get to find out that this place now that is a resistance zone, if you look, you get to see that, I'll take it to the low here. Now you get to see that this when price got to this junction, it did not get to this area, and it was rejected. See where price was rejected from? Price wasn't rejected here. Okay, price wasn't rejected here. So people were gonna a lot of people are gonna take this area as it's nothing, because only this week is here, and this is where a lot of people are gonna plot their supports and resistance here, ignoring this little thing. But you get to find out that in the nearest future, this little thing here was respected. You see, it was respected. So we are looking for obvious supports and resistance zones. All right. So you don't want to fall prey to just putting your trend line because it touched here, and then you say okay, then you fall prey to taking sells here when buyers are still ready to push market here, and this now becomes a false breakout to you, and you fall prey to it thinking that this is where the selling opportunity is going to take place. So but if you have that rectangle shape and cover from this area to this area and bring it out this way, okay, so you have a zone wanting to make sure you don't take a sell from here until the market breaks out of it. And now you see that the market broke out of it, came back, and that place now became resistance. And now this is where you want to take opportunities to sell, because now at this junction, you have number one, you have seen the rejection, you have seen that here is now a resistance, and number two, you see the candlestick being fully red in color, okay, with full power of the sellers. Now it's giving you two signs that okay, now sellers are ready to push markets downward. So now the sellers are ready to push market downward. You want to look for the next obvious support zone, and that is where you want to think about taking your profit from that area, because that is where you feel the market will get to again and bounce back up. So now you get to see that let me see, you get to see that this was now another area where market got rejected. And if you look at the past, you will find out that something really happened here sometime at the past. Okay, something really happened here sometime at the past. This is this. If you look, if you view, you're gonna see something really happen in the past. I don't want to start viewing those things right now so that I wouldn't waste so much time. Okay, so now you want to make sure that from here where the market broke out and went down, you spot out the next obvious support zone, and that's where you want to take your profit from. Okay, so once you take your profit from there, you want to now begin to look out for So once you take your profit from there, you want to start looking out for another selling opportunity. And for you to look for another selling opportunity, because it's a downtrend in markets, I always advise people, make sure you always take trades along with the trend, okay? So you know it's a downtrending market. So now that market has gotten to this level and buyers are taking power, you want to get off the market with the little profit you've made already, and then look for another selling opportunity. Okay, look for another selling opportunity. Why a lot of people blow their accounts sometimes is after they've taken the sell, they've made some profit selling. They want to also make sure they buy along. Okay, they want to make sure they buy along, sell along, buy along. Come on, why do that? You're just gonna blow an account off within a second if you don't, if you take entries at the wrong zone. Why buying and selling and buying and selling? Okay, so you want to make sure you trade along with the trend. Now let me see if can find out some other example for better understanding. Now we are in the daily time frame. Now if we okay, let me see a 30 minutes time frame. Okay, now in a 30 minutes time frame, you want to bring out your rectangle, take it from the end of the week down to the top and bring it out this way. Okay, from the end of the week, you take it up. Okay, bring it up. Now you get to see that this rectangle has helped you cover this week. I hope it is not so tiny for you guys. Okay, you get to see that the rectangle has helped you cover this week. All right, and then after covering the week, it has also covered the end where the markets where the candlestick closed. Okay, so you want to be watching out what's going to happen inside all the zone. So now you have two different support zones or support lines, if I'm going to put it that way, and one is here and another line is here at the same time. So you want to watch out what will happen when price gets here and what will happen when price gets here. Now you get to see this is where price got the sellers took power again, okay, in the future. And at the same time, you get to see that below the same rectangle was where price was rejected. So you can see now, you get to see, have you understood now the power of this rectangle? The rectangle helps you spot out at least two close zones, supports or resistance zones. So instead of you relying so much on only this trend line like this, telling you, okay, it's resistance, huh? You want to use this rectangle because it's going to help you take good care of both support and resistance at the same time. Okay, so now you get to see that this was resistance, this was another resistance. Now price broke out, okay, resistance here, and price finally broke out and now rested on top of it. Okay, rested on top of it and pushed up, came back again. You see another rest again. Buyers pushed up, sellers pushed down again into the zone again, pushed down, push up again. You see the resistance, okay? And then the market went down again and sellers pushed up again. Now sellers has pushed up, and what are you seeing here again? Resistance. So this trend, this rectangle has taken care of a lot of support and resistance for you so that you don't fall prey to false breakout. So now you want to look forward to selling if this market can keep moving and break out of this rectangle, break out of it, and then go back, and that place now becomes resistance. Because once this price gets here now, it's going to struggle before it breaks out because it's going to turn to supports, right? And once it breaks out and tries to pull back again, if it struggles around here, it now becomes resistance. So you want to, after the pullback, you want to look forward to selling if you see some other signs or some other reasons why you should sell, like your candlestick. Like if you see a strong reddish candlestick coming pushing market down, that's where you know the sellers are getting in power and you can take your sell. But if this market breaks out of here, okay, and finally rest on it, you know that it is now a support. You can look forward to selling. But I don't advise you to be doing sell and buy, sell and buy. Always trying to take trades with the trend, okay? So I hope you've got to understand how to use this rectangle to spot out obvious supports and resistance while taking your trades. Now, before we go to question time, let me see if we are going to do one more example, because I know Zoom is going to get us off right now again. So the next comment in should be question time. Let me see if we can do one more thing. One more thing. Now, let's take for instance, I want to spot out. Okay, let me now take for instance, I've not taught you this, okay? And you want to spot out your support and resistance. This is what you're going to do. This is what a lot of people do. This is my resistance. This is my support. This is my support. This is my support. This is what a lot of people do. Okay, this is my support. This is what a lot of people do, right? And then you get to find out that at the end of the day, there's trend line everywhere. There's trend line everywhere. So where do you want to take a trade from? There's trend line absolutely everywhere. You've soiled your entire chart with so much trend line. I was surprised when a trader came to me on my DM Sunday and showed me his chart. He said, "Hey team, where do I sell from? Where do I buy from?" When I saw the chart, I almost threw my phone away because the chart was scary, you know? So you don't spot out the kind of support and resistance like this because you just soil your chart and you wouldn't know where you want to take a trade from. Okay, so I've given you a clearer way and a clearer picture to spot out your support and resistance, and it's gonna even look more beautiful and nice, okay, when you use that rectangle, because all these things are gonna be nonsense. All these things are gonna be nonsense to you, huh? So you just use what this from the week to the area where the candle closed and move it. Okay, you move it to. So let's take for instance, this is where the market was when you were making your analysis, right? So now here and here, you're looking forward to what will happen in between all these areas in this place. Now you get to see market pushed up, came down, all right, got here, and what happened? Pushed up, came down, okay, it became support here, it broke out, became resistance here, broke out, huh? But you see what was happening within this little range. So at the end of the day, market now came out, buyers trying to push, and this same rectangle became resistance and then pushed markets down. So maybe in our next Zoom meeting, I'm going to teach us how to use your trend lines like this one, okay? Sideways, you can use it sideways, you can also use it, or you can use it horizontally, vertically, or either way. I'm going to teach us how to use these ones to spot out channels, okay? You're going to use it to learn how to spot out channels for your support and resistance, okay? That's going to be our next meeting. So for now, I think I've said enough, and I believe a lot of people are going to have some questions to ask. So with the little minutes we have, if you have questions, please ask.
Okay, I have 2 questions.
Okay.
Am I to understand that when I'm drawing the support and resistance line, I do it on the higher time frame, which might be the hour or the 4-hour?
Yeah.
Okay, my next question, because I am still unsure as to where to draw the support and resistance line. Is it that I look, all right, say I'm going to draw the resistance line. Is it that I look back to see what is the highest point, and then I would draw my resistance there? And likewise for the support, I would look back to see the lowest point and draw my support line?
Okay. For your first question, it's not a mandate that you spot out your support and resistance from high time frames, because you can also spot out your resistance from even lower time frames. Okay, like this is a
Okay.
5-minute time frame. You can still spot out support and resistance from your 5 minutes time frame. Okay, as you can see here, this is also supports, market supporting up here, supporting and becomes resistance here. So you can spot out your support and resistance from any time frame, just depending on your kind of trading. All right, depending on the kind of trader that you are and the kind of and what you're looking for in the markets. We have 10 minutes to end this section. After 10 minutes, we're going to end this section and then come back in fully for other questions. So it's not all about higher time frame. Any time frame can give you your support and resistance. Now, your next question, please come again with your next question.
What I was asking is to draw the support and resistance line. Example,
Okay.
the resistance, do I look back at the highest point and draw my resistance line there? And for the support, do I look back and see my lowest point and draw my line there?
Okay. Now, let me take us to maybe, let's say, 1 hour time frame. Now, we take for instance that market hasn't, nothing has occurred at this junction. Let me just say we do something like this. I'll make it black. I hope it covers it. It doesn't cover it. Okay, so we'll just take for instance this market hasn't taken place at this junction. So you want to figure out where could this market go next, and then you want to bring out your support and your resistance. Huh? Now let me put it this way. Okay, so let's take for instance, nothing has happened here. This is where market is. You want to spot out your support and resistance. You want to look for the, this is the lowest low so far. Okay, this is the lowest low so far. Change the color to white. This is the lowest low. So you want to cover that wick from that wick to the closing of the candlestick. And then at the same time, you want to also figure out your resistance zone. Always, you must make sure that the market touches that zone at least 2 or 3 times before you know it's an obvious zone. Okay, 2 or 3 times. So here is one as support, and here is two as resistance. So it's an obvious zone, and obvious, and as you can see, it's also the highest so far to the current price. Okay, so this is your lowest low to the current price. This is your highest high to the current price. So at this junction now, you have your resistance, you have your support. So when market moves here, so now your imagination is that if market breaks out here, you want to sell. Okay, and now your imagination is that from here, if market ends up going back up, something should happen at this zone because of this. And you can see this happening here. So it became a resistance. Okay, it broke out. Now you want to also believe that since this is the highest high where you spread out support, this resistance zone, you want to make sure that you want to believe that when market gets to this junction, something should also happen in the nearest future. So market go to this zone, and then resistance took place here. There's every tendency that this market might still decide to bounce back. Okay, bounce back and still want to go and touch that level before it continues moving downward, since it's a downtrend. Before it continues moving downward, there's every tendency that this market might want to go back and touch that zone. Now, the thing is a downtrend, so you should continue to see lower highs and lower lows. So if this market breaks out and crosses this, is no more a downtrend for this particular zone. It has turned into a reversal. That is, buyers are now pushing market upward. Is now up, is now gradually turning into an uptrend. So a downtrend means that you must continue to see higher lows. From here is higher to a low. From here is higher and should have another low. So you can see that this is a downtrend. Okay, market from here is so high, here was became another high but lower than the previous high. Here is now another lower high from the previous high. So you want to use the previous high to spot out your resistance and use the previous low to spot out your support. I hope that was taken.
Yes, that was okay.
Okay, do we have questions from any other trader?
Yeah, I have a question.
Okay, yes, sir.
Okay, this is my question. Let's say I'm working on 1 minute time frame on boom and crash. Okay, what is the appropriate higher time frame that I should go back? Because I'm wondering if I'm working on 1 minute, should I go and look for 4 hours chart or 1 hour chart? Is it not too far from the 1 minute? So that's actually my question.
Okay, please turn off your mic. I don't think Zoom will allow me to give the answer to this until I end this meeting and start up another one, because we have just a few minutes to close up. We have 4 more minutes. Okay, let me see if I can answer. Okay, so now this is a thing, like the kind of trader that I am. If you notice, whenever I give signals, I say signals, whenever I give strategies, you get to notice that almost all my strategies are always falling in between 5 minutes or 15 minutes. I hardly give 1 minute time frame strategies nowadays. That's because I prefer taking trades from higher time frames than 1 minute time frame, because if you it is okay to spot out support and resistance from 1 minute time frame, okay, but when I have 5 minute time frame as uh, a time frame to spot out resistance and support or to take trades is more cleaner for me, because I can easily see what I want to see. Okay, now this is 5 minutes. 5 minutes will show me everything that I want to see. 5 minutes is going to show me absolutely almost everything I want to see. And then I also know that if one candlestick closes in a 5 minute time frame, I'm automatically taking 5 minutes candlesticks. So why I do my analysis both from a higher time frame like 4 hours, especially for boom and crash, is because I want to see an area where even though spikes are taking place, I don't want to be scared of the spikes, because I want to see an area where market is also is going to get to and resistance will take place. Now you get to see that, okay, this is the 4 hour time frame. And now imagine if I spotted out here to be my support zone. Okay, so let me say from, imagine if I believe that market is going to come down to reach this level, and then maybe I took my trade from here. Okay, I wouldn't be scared because I've spotted out here as a support zone, believing that this is where market will go to and reversal will take place. I wouldn't be scared of the spikes that will occur. Okay, I wouldn't be scared of the spikes, because I know that even if the spike takes place, candlesticks are still going to keep bringing market down till it gets to an area where I anticipated market to get to. But if I'm on the 1 minute time frame, I wouldn't be able to really figure out where this market wants to really go to. I won't be able to figure out where this market really wants to go to. But I can actually use normal support and resistance to figure out where another spike can take place. Okay, I can use it to figure out where another spike can take place. But now you get to see that if I bring out this trend line here now, I'm believing that this is where a spike took place. Now spike is still going up and going up, right? And going up. Candlesticks are bringing market down, and spike is going up again. A normal trader will be afraid of all these spikes taking place. He wouldn't even want to enter the trade because he's scared what was going to happen, where the spikes, you know. But if you're on a higher time frame and you make your analysis from a higher time frame, you already know where you believe, no matter how the spike takes place, you already believe that this is where market might end up going to hit a support zone or a resistance zone. Okay, so it's quite more better when you make your analysis from higher time frames and then take your entry from lower time frame, especially 5 minute time frame. I hardly take entries from 1 minute time frame nowadays, because I see 5 minutes to be more better for me,